Ladies and gentlemen, and welcome back to another Bitcoin update. We still have no webcam, unfortunately. It will be up in a few days again. I've just ordered a desk online. It's getting delivered, a new desk, and so it won't be back on webcam until we get that sorted out. But until then, we're going to be going no camera. I don't think many people mind too much, but I know my beautiful face would be missed amongst the community for some, and I assure you we'll be back soon. So look. We're back here on Bitcoin. We have a topic in this video. The topic of this video is basically looking into the short-term TA versus the macro and the fractal, okay? And that might be confusing to some at first, but I'll explain it very easily, okay? The short-term TA doesn't look particularly good. It hasn't looked good for a while. We have a long-term Bitcoin bearish divergence. Now, this divergence here was a resistance line, and it did break to the upside recently, but it is still a divergence, right? We can see the peak back here. Well, not the peak, the pump back here to around 22k. Ever since then, we've been seeing a strong bearish divergence on the daily chart with the price action moving upwards strongly and the RSI trending downwards strongly. We also have volume diminishing rapidly, okay? Ever since around the 13th of March, we've actually seen volume diminish rapidly as the move continues upwards, which is bearish as well as a sign of exhaustion. If we zoom into the short-term charts, even on this move here, and bear with me, because the whole video is not going to be bearish, but bear with me here. It is worth noting this stuff. Even during this move above 28.6k, which is the major red line here, the major resistance zone, which was a major support zone back in 2021 and 2022, very major level, strongest support resistance zone in 4 years. When we broke above that, it's a pink line here on this 30-minute chart. We've gone straight into what is basically an ascending channel formation. Now, this is not a bull flag. It looks like a bull flag. A bull flag is essentially when you see, for example, a sharp move to the upside, some downwards consolidation, and then another sharp move to the upside. This is not a bull flag because we're actually seeing it slightly slanting to the upside, meaning it's a reversal pattern. It's actually an ascending channel formation rather than a descending or a horizontal channel formation. And so this, on top of the daily chart bearishness, is a sign of exhaustion and is a sign that the chart should be moving downwards realistically. Now, we have a lot of leadway here. Okay, it's not all bad. We have a lot of leadway here because even if we do break down on this ascending channel formation, it's not a bear flag and it's not a bull flag. So we can't measure the move from all the way back there. So the measured move won't go strongly downwards. We can measure the move, for example, from this pattern formation here, from the first retest of the bottom to the first recess of a top, and apply that to the breakout zone and see that even if we do break down from this ascending channel formation, the preliminary short-term breakdown would only take us to that high 28k region, which is still above 28.6k. Now, the reason why this is important, even though we probably go further down from there, the reason why it's important to note is because what we're looking for ultimately is a weekly candle close in 3 days and 11 hours above 28.6k. So it doesn't really matter if we break down from this channel formation. It doesn't really matter if we go down, so long as we buy enough time basically on Bitcoin. So long as we buy enough time to get past the next 3 days and 11 hours and close above 28.6k, the macro structure will have been bullish enough from this close to ignore the short-term TA and continue going upwards. I see it as highly unlikely that if Bitcoin closes above 28.6k, that we would close back below it. I don't think we will. I think if we get that close above 28.6k, I think it is very likely that we maintain above that level for a long period of time. I'm talking years. I'm talking maybe even indefinitely, right? It really depends. I can't say indefinitely. Obviously, you can't make predictions for a decade in the future, but I'm talking years here. If we close this weekly candle above 28.6k, it's not my opinion. It's the facts from the charts. This is a major level. You don't jump up and down below this level, above and below this level, just like you don't jump up and down above and below this level in 2018, that 6k level. The only reason we did that for literally a week and a half is because of the COVID crash, the black swan event. And even then, it still acted as resistance from downside. We still broke above it pretty much immediately and skyrocketed to the upside. This major level at 28.6k is a level in which if we close above it, we're probably not going to go back down below it. And that's why, even though the charts are pretty bearish right now, right? Even though everything is a little bit bearish, a little bit exhausted, even if we do break down here, okay, all we really need to do, doesn't really matter if we break down. What matters is we buy enough time. 3 days and 11 hours, if we're still anywhere above this region, doesn't matter if we're above the channel, below the channel, whatever, then we're all good. So everything really rests on the next 3 days and 11 hours. I know I've kind of leaned a little bit bearish at the start of this video. That's because the short-term price action and the daily chart are a little bit bearish. But honestly, to be honest with you, I would actually lean a little bit more bullish at this period in time. I think I'm relatively confident that Bitcoin will actually close above 28.6k. I see it as unlikely, not impossible by any means, right? But unlikely that Bitcoin closes below 28.6K in this weekly candle. I could be wrong. There's not a massive amount of evidence to support it. I'm just basing that off what I think in the long term, what we've seen recently, for example, breaks above things like the Gaussian channel on the weekly chart. It's not very often that you get breaks above the Gaussian channel without a followed through extensive move, right? If we delete everything on this chart here, we can see that every time really that we've entered past, down below the center line of the Gaussian channel, we've extended downwards far. Every time we've broken above it, we've extended upwards far, down below, extended past far, right? Every time we make a move past the center line of the Gaussian channel, which we've done, we've made a move right now past the center line of the Gaussian channel, we generally extend quite high to the upside or quite down, quite far to the downside, depending on the direction in which we break it. Right now, we've broken to the upside, and so it does stand to reason to say that, maybe we'll extend high to the upside here. So I think that's one of the reasons to be bullish. There's obviously many more. For example, 200-week SMA has been broken and everything like that. I think I'm pretty bullish here. I think Bitcoin probably will get that weekly candle close above 28.6K. And I think that even just looking at the 2019 fractal, what we've seen is pretty similar to 2019. We had and again, this is something I've discussed quite extensively recently. We've seen a horizontal level in 2019, 2018, that pink line there at 6K. We saw a move to the upside. We saw 3 or 4 doji candles. We broke above that level, and we saw a second part to the move, a second leg to the move, only to be rejected a little bit higher for consolidation before the bull market. I think we'll see a pretty similar thing here. We've seen those doji candles. We're on the way to starting that second leg. And that second leg, in my opinion, will probably take us up to that mid to high 30K region before some consolidation for a few months, maybe even like 5 or 6 months potentially. It really depends. And then bull market will start after the halving, right? That's kind of what I'm looking at. That could be entirely wrong, that structure I just drew there. But all of that doesn't really matter. What matters is, I still think we're probably going to get above that 28.6K level. That's all that matters in the end, because, I can't, it's hard to say what's going to happen after we get above it, other than we probably won't break that back down below it, because we're only basing it off a previous cycle. But based on the limited evidence we have, that's probably what I think would happen. That little move to the upside high to that 30K region, a high 30K region, and then that consolidation and correction, and then the upwards move. That's what happened in the last cycle, so we can assume to a certain extent that it's going to happen in a similar fashion again. It definitely won't be the same, but it definitely will be similar. And the reason I'm willing to make those assumptions here is because cyclical theory has been so bloody strong. It's been excellent. The cyclical theory really has been powerful, and all you need to do really is just look at the structure of Bitcoin long term. The 4-year cycle theory, everyone knows what it is by now. I'm not going to bring up that chart, but what I will show you is a chart that's very similar to it on a monthly chart, right? Every single bull market so far, and every 4 years, we've formed a horizontal support level in the red. We've broken down below that level and broken down the pink line, which is the 21 EMA. Every time that's happened, we've come down and we formed a horizontal support zone in yellow. And every single time we've formed that horizontal support zone in yellow, on each of these 3 occasions, that has been between the region of 39 and 44 on the RSI. So the macro structure in each 3 of these cycles, 1 over there, 2 over here, and 3 over here, has been astoundingly similar, okay? And we can only expect, based on the thesis that the trend is your friend until it ends, that it will be similar in the future. Now, again, I'll bring it back to the main point of this video. The only thing we're really looking at here, okay, is not whether Bitcoin's going to go down to new lows. We think that's unlikely unless we break back down below 25.3K. That's our invalidation point, but I still think that's incredibly unlikely. I think the bottom is in. But the main question is, when are we going to get above 28.6K? It's not if we're going to get above it. It's when are we going to get above it? Will it be this week? I personally think it probably will. I'd say I'm about 70-75% chance we probably will. It's more likely than not. Or will it be in the future? After a little bit of correction, after a little bit of consolidation? Will it be after we have a little break on Bitcoin? Based on what's happened before with these horizontal support levels we see in bull markets, we've seen that, in 2014 over here, we had around 420 days between the breakdown below that horizontal support level and the break back above it. We had 180-ish in 2019. And so far, if we're taking the average between 420 and 180, that's going to come out as 308. And right now, we are on the 308th day, right? We're on the same week. So this would be the perfect time, mathematically speaking, to break above that level. Again, it doesn't have to happen this week. I just think it probably will. Short-term TA, it doesn't look good. There's no way around that. It doesn't look good. But you have to remember, guys, the short-term TO hasn't looked good since like February. Okay, and that's not an exaggeration. It really hasn't. It hasn't looked good for a long period of time. Okay, it was unexpected by all means that Bitcoin would break to the upside after that, right, in February, let alone what happened here in March, all right? And now what's happening is, this is called kind of medium-term TA. Short-term TA has been pretty accurate. Medium-term TA, I should say. We're entering another kind of bearish medium-term TA phase, but we've just broken above in the last two. What is this indicative of? It's indicative of the fact that the macro, right, is more important at this point in time. Why is the macro more important? The macro is more important because we're entering a different macro phase. We're entering from the phase of bear market, the phase we've seen for the last 13 months on Bitcoin, the phase of bear market, right, to the phase of not necessarily bull market, but accumulation, okay? That's what we're doing. We're shifting between those two phases in the macro, and that's why the macro is acting as a more, I guess you could say, correct assumption, a more accurate, thing of what's going on, rather than the medium-term TA, which is generally quite strong and generally quite indicative of the future. So right now, that's my opinion on Bitcoin. Again, I'm just going to be repeating these main points all week until we get the close. I can't stress how important it is, right? I'm sorry for sounding like a broken record, but that 28.6K level and that weekly candle in 3 days and 11 hours, incredibly important. So I will be repeating myself all week in that topic. I've added some new stuff in this video as well, but I'll add some new stuff in the videos tomorrow and the day after for sure. But ultimately, that's literally what you need to be watching. If you're watching anything else, you're crazy. Watch this, right? 28.6K weekly candle. We don't close above it this week. It's a matter of time, I think. Unless we break below 25.2, that's my invalidation. Incredibly unlikely in my opinion, but still possible. We can't rule anything out. I could be wrong. Like always, I could be wrong. But as of right now, that's what we're looking at, guys. So thank you for watching. Before we end the video, please check out a few things. First and foremost, guys, the VIP sale. We have a 25% discount on VIP memberships. Only 24 hours left on that VIP sale. So if you're interested in 25% discount on VIP memberships, 24 hours remaining, go ahead and check that out in the description below. This is your last chance to do that. Other than that, the BitGet exchange, I've got a list of the coins that are tradable on derivatives on the BitGet exchange. You can see there is, I don't know how many there are exactly. I'm guessing, 150, maybe even, I don't know, 200 here. There's a bunch of coins here on BitGet you can trade with derivatives, and all of these coins you can trade with 5 times lower fees than Binance. You can make an account, but it's optional KYC. You can kind of line up with the fundamental values of cryptocurrency by not KYCing if you wish to do so. So go ahead and sign up to BitGet if you're interested, using my referral link in the description below for a 15% trading fee discount for life. That's very important there. If you're interested, referral link will help you out, 15% discount on trading fees for life. You can save thousands over the long term with that one, and you're helping out the channel as well. And then, guys, if you want to learn how to trade for yourself, the Crypto Academy's Become a Trader 10-unit course is probably for you. Now, obviously, there's various ways you can learn how to trade. You can learn through books, you can learn through the internet, you can learn through YouTube for free if you've got enough time and dedication. But if you want to learn in one structured course that is proven, right? Proven through about 100 students to give you all the information you need from start to finish on how to trade, this is the way to do it, right? If you trust me, you trust my analysis, you trust MegaWell Crypto, you trust his analysis. We developed this course last year. This course is probably for you. So go ahead and read up about it on the website, and also go down to our email down here at cryptoacademycourses@gmail.com, and we'll send you an email. If you email us there, we'll send you back an information pamphlet and a video walking you through the course, showing you what it looks like, etc. So guys, thank you for watching. Without further ado, I hope you enjoyed the video, and I'll catch you in the next one. Cheers.